Hi, it's Lee, and welcome to the Tesla Economist. We've now had clarification of the actual production numbers that came out of China. This number can certainly shine a lot more light on what is going on with demand for Teslas in Q3, along with more information in other areas of the business. I love it when we have numbers to work with, in case you couldn't tell. Rob from Tesla Daily is reporting that 82,000 vehicles were produced in Shanghai in September, so let's go through what it means for demand, production, and potentially Q4. The highest production month in China to date before was 71,000 vehicles in June. 82,000 is 11,000 more, which is a 15% increase in production since the line upgrade. We heard these line upgrades might be closer to 40% increase in production, and we're expecting possibly as high as 100,000 vehicles produced in a month. Even Troy Teslike on Twitter at one stage expected 100,000 for September, but it wasn't a totally smooth sailing month. There were some production pauses due to energy shortages and a few other issues too. The latest we've heard, though, is that the production rate has increased by 30% to 14,000 Model Ys and 8,000 Model 3s a week, which is 94,000 to 97,000 a month. I mean, I'm happy with that. It's a great number, no complaints. Apparently, Tesla did attempt this rate, but it was too hard for the workers with just 3 shifts, and they supposedly would need to add a 4th shift to hit these full capacity numbers. In the meantime, supposedly production will be limited to 13,000 Model Ys and 7,500 Model 3s a week, or 87 to 91,000 a month. I had kind of speculated around 270,000 with a hopeful 290,000 before. I don't know if Tesla will try and push extra hard for Q4 or not, but I'm not complaining about 270,000. These line upgrades are a bonus anyway. Still, let's acknowledge that when we are at 14,000 Model Ys a week, then that's very close to 3 times volume production. 3 times, or 728,000 a year just from one line. The economies of scale that come from making that many vehicles from one line reduce costs and increase margins that much more, especially when most of the competition are struggling to hit 1/5 that rate. Is it possible, with the new manufacturing processes at the new factories, they could reach 1 million a year capacity on those lines? Perhaps after a few years of ramping and refining? Anyway, we now have all the China figures, so we can try and see if there are potential issues with demand. Tesla's wholesale figure was 83,000, and they produced 82,000. That wholesale figure factors in the number of vehicles delivered in China and the number of vehicles exported out of China. Even if the vehicles are not sold in Europe, Australia, or wherever they're exported to, they still count as wholesale. However, if the vehicles are not delivered in China or end up in inventory, they do not count as wholesale vehicles. Firstly, you might notice that Tesla sold and exported 1,000 more vehicles than they made. This is due to vehicles that were produced in August, but not delivered until September. So there was a slight overlap there. Likewise, there will also be cars that were produced in September and won't be delivered until October. Think about a car coming off the production line on the last day of the month. They aren't going to reach their destination on time, or likely the last few days or so. Therefore, there's always some sort of overlap. So let's go through our numbers then. Tesla sold over 77,000 domestically in China for the month. So what can we tell as far as demand is concerned here? Well, we had people speculating that these 22,000 missed deliveries, i.e. the difference from production and deliveries, were due to demand reducing in China. But as we can see, Tesla actually have a higher wholesale amount of vehicles from China than they actually produced. So this is clearly not the case. Some people were saying that Tesla exported about 15,000 of these vehicles, and they were on boats because demand in China dried up, and Tesla had to export the remaining vehicles. But we now know that only 5,000 were exported, so if demand had dried up, for lack of a better word, then it was 1/3 fewer cars that had to be exported than people were saying. But again, so what? It's not even that demand would have dried up, it's that supply would have started to catch up, as Tesla just ramped up their production. And besides, where do you think these vehicles that are being exported are headed? That's right, they go to other Tesla customers who also ordered a Tesla and have been waiting for perhaps 6 months. Tesla has a lot of demand in China. They also produce in China. So isn't it smart to ramp up your production there and meet all the local demand, then export the excess demand you have? Especially when your profit is higher for the local sales. This demand has dried up theory is also further exacerbated by the fact that the economy is not looking great, and overall auto demand will dry up. And if you're selling luxury EVs, then you're in real trouble. But in a previous video, I compared the price of a Model Y to a Volkswagen Touareg and a BMW X3 in Germany, and we discovered that the Model Y is a much lower cost car. Sure, you have to factor in the fuel savings too for the Volkswagen, but still, this is not what I classify as a luxury priced car. I think this extends from consumers in the US who want a Model Y long range in the US, and they've been so popular there, Tesla had to raise their prices. And on top of that, they are still very supply constrained. And as a result, Tesla now has a label of luxury SUV. And then in a down economy, people can't afford a luxury SUV. But a rear-wheel drive Model Y is a great value car. On top of that, people also think that because BYD managed to ramp up so much during the same period, that has eaten Tesla's market share, and by extension, taken away their sales. Not to mention the influx of all these other new Tesla competitors, which are in very low production still, and I doubt compared to anything like a Tesla. But you can make headlines that are true that say, half a dozen new Tesla competitors released, BYD overtake Tesla on NEV sales, Tesla's market share decreases. And remember, a lot of this market share stuff is based off the Q2 numbers when Tesla was in lockdown. Then accompany that with demand dropping for luxury SUVs in a recession, and it's going to scare people. But that's what I do. I look into all of these to analyze it and find out what is really happening. Also, I've checked the China inventory for Teslas. There's no new Teslas for sale in the entire country, and only about 30 used Model Ys. Does that sound like a demand problem? Then Tesla offered 8,000 yuan off your insurance if you buy a Model Y, which they've now reduced to 7,000 yuan and extended it until the end of the year. Tesla are getting so desperate they're offering a subsidy on insurance of around 1,000 US dollars. That has now been inferred as a serious drop in demand. Add to that rumours that Tesla were cutting their price by 40,000 yuan, or over $5,000, back to the old price they used to have, when they still made 30% margin. There's absolutely no truth to this rumour, but obviously if consumers believed it, then it would deter some from purchasing, as that is a big price saving. When I bought my wife's Model 3, we got about a US $5,000 government subsidy. This was about a 12% discount, and it probably did influence my buying decision. Consumers are very price sensitive when it comes to cars. Even a few $1,000s makes a big difference and can attract a lot of new buyers. But I'm not here saying to you, oh, Tesla has no demand problem. They can charge whatever they want and will have unlimited demand. I'm saying that it is possible that Tesla have currently fulfilled their local demand in China by ramping up the supply enough at the existing price point. And now, any excess vehicles will be exported. However, Tesla make more profit selling domestically, so perhaps they are now trying to encourage that fraction extra with insurance subsidies to meet demand in a still more profitable market. This rumour, however, is perhaps somewhat of a self-fulfilling prophecy, but I actually don't think Tesla will cut prices this year. If they actually do need to cut prices, I think it'll be closer to around 17,000 yuan, not 40,000, which will end up being an actual saving of 28,000 yuan as they then hit the Chinese EV subsidy threshold. This price point will mean they profit about as much as exports as domestic sales. So Tesla won't care as much about pushing domestic sales, as there is little difference in profit. And I have no problem with Tesla dropping prices. I'm fully aware of what supply and demand means and how it's controlled with price. Adam Smith brought this up as far back as 1776. It's been well established since. Of course, there is another factor due to Tesla's Shanghai production being lower than expected. Well, it doesn't change the total production numbers, which would also mean that the other factories have actually ramped up more than we expected too. I'm thinking this could be mainly Fremont. I will revise my delivery numbers and then should have an earnings estimate for Q3 early next week. So although the Shanghai production numbers were a little lower than I would have liked, but seeing that there was also not a huge amount produced and no excess of unsold vehicles or huge amount having to be exported reassures us that Tesla is still very much in demand. A Model Y price drop if Tesla is selling 100,000 Model Ys in China would only result in about $150 million less in earnings, or about 2.3%. Not a big deal, but look how much the stock has overreacted. Therefore, I think as investors, we can be happy with demand, and there were reasons production was not as high as we'd hoped too. Let's hope for a smooth Q4 in production with another record quarter. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.